Now, for more on the markets, we cross over to Nompumelelo Siziba. She's standing by at the JSE. Nompumelelo, lots happening with the Rand and the data that Stats SA released this morning.
That's correct, Nzinga. Thanks very much. Well, after the very disappointing news that we've fallen into a recession, the Rand did fall by as much as 1.3%, just slightly over that, but it's come back a little bit, hovering around the 12.8 against the US dollar mark. And in the meantime, we see the all-share index is in negative territory, down by about 0.5%, but that's pretty much in line with global markets, although our financials have been seriously wounded, down nearly 1.7%. And this is obvious because financial stocks are very heavily correlated to what the economic performance is. And at the moment, that's not looking terribly good. And then in company news, we are hearing that Oak Bay Resources has lost yet another sponsor on the JSE. And it's stated that it's busy looking for a new one. The question is, will it get one? Let's take a look at the indicators. Well, I'm joined by Owen Nkomo. He's the Executive Director of Nkunzi Wealth. Thanks very much for joining us as always, Owen.
Thank you for having me, Nombo.
Good stuff. Now, let's just get global first before we get down into the most pressing economic news locally. Markets generally, globally, seeming to be down following the US close. What's been driving the markets generally?
Look, I mean, I think the markets have rallied too hard in the past few months since Donald Trump got in charge of America, and we've discussed it many times in this show before. I think that people are getting concerned that lack of implementation of policy is going to be an issue, and people at the same time are looking at the economic parameters and starting to wonder if America can continue to grow at the pace it's growing at. With expectations that the economy could see inflation start to tick higher, and there's a big debate around interest rates in terms of where they're going to go. So there's a lot of uncertainty in the market, and if you want exactly where to find that, just go to the US dollar itself. You see it's fallen from 106 all the way down to about 112.65 early this morning.
And then now let's look at the oil price as well. Yesterday we saw the oil price spike,
yes,
and this was on the back of a number of Arab states deciding to cut ties with Qatar, which is also a member of OPEC.
Yes.
So now the market reacted and the prices went up, and then today the oil price has come down. So what's the rationale behind that?
Look, I mean, I think there's no rationale. It's irrational behavior of the markets, basically, where I do think that the most important thing, in my view, for the oil markets is to get demand to start growing, but we don't have that demand coming through because the rest of the world is not ticking aggressively higher. And obviously the fact that, on the wings, you've got the shale gas producers waiting to make sure that if oil price gets too aggressively pushed higher, they can start coming in and pumping out some shale gas out of the ground as an alternative to oil. I do think it's a demand story, and at the same time it was a knee-jerk reaction. If you picked up last week, the momentum of the oil price on the downside was very big, and most of that is because some of the OPEC members unnecessarily not sticking to the cut agreements that they agreed on a few months back. Some guys are still producing, I think, at full steam. If you're excluding the two members of OPEC that were allowed to continue producing at their daily maximum capacity, some people are still taking oil out of the ground. So where they're going to sell it, the demand is not that aggressive.
Indeed, and then. Here at home, obviously, the big news was obviously the GDP number for the first quarter, a contraction of 0.7%, which the market did not expect. And the Rand, yes, it did fall in reaction there too, but it's come back a little bit. I'm quite surprised because the market didn't expect a recession.
No, the market didn't expect this number. I mean, we're looking for an increase of anything between 0.7 and 1% collectively for that quarter. So now we probably we've been nastily surprised, and you can see it reflected in the market today. Some of these industrial stocks are not doing well. The banking stocks are not doing well. People are obviously starting to wonder if the next quarter is also going to see a negative count. Because if we do see a negative count in the next quarter, you know, the challenge we're going to have is that we will not be able to meet that 1% target growth that people have been purporting that South Africa is going to grow it. You'll start to see guys like IMF and the World Bank, you know, and a few ratings agencies start to come through and say, look, we're concerned about this growth in the country, which is definitely a big concern now, because we've got all these things that we can't control, and all of a sudden our GDP numbers are starting to look like porridge. And I think it's not a great reflection of what the future holds. If indeed if this isn't just a once-off number following on a second on another quarter where we received negative growth, if we continue to see negative growth, I think we may start to see the panic buttons being hit.
From the numbers that we've seen, though, the month-on-month numbers that we've seen for the second quarter, what's your hope about the GDP for Q2?
Look, I mean, the numbers remain mixed in my view, but if you remember I think about 3 odd weeks ago, we had, that's about a month actually, we had the manufacturing and the mining production numbers as well as the gold production numbers. Some of those numbers surprised quite aggressively on the upside relative to what we're expecting. And I'm hoping that on the is not a rosy one at this stage.
Indeed. And then now in week, we understand. We managed to escape last week with Fitch and Standard & Poor's keeping our ratings the same. But with this new information, what do you think Moody's will do?
Well, look, I mean, I think it's obviously negative, and it comes in at a time when, once again, the currency was on a nice run. And we're looking at the bond yields there. The bond yields were also very accommodative of a softer interest rate environment. And I think that, in my view, with the GDP numbers coming in softer than expected, way softer than expected, it could raise some alarm bells to the ratings agencies like Moody's, who still need to tell us what they think about South Africa. But as an investing market community, we have basically started trading and investing in South Africa as if everyone had rated us at a junk status level. And I think that Moody's will definitely highlight that they're concerned about the compression in the growth rate in the country. So it's a big risk.
Okay. Well, one of the concerns that has been a continuing theme in the last couple of weeks are these Gupta emails. And it looks as though this has had an impact on the Oak Bay Resources Company, with yet another sponsor, a JSE sponsor, withdrawing from the company. Now, what does a JSE sponsor actually do for a company on the JSE? And also the Gupta saying they're hoping by the end of July they will have found a new one. If they don't find a new one, does it mean their listing here will be under threat?
Yeah, definitely it will be under threat. It's a requirement by the JSE for a listed entity to have a corporate advisor or a sponsor, as it were. And I think, obviously, Oak Bay is going under a lot of strain at the moment. We've seen it. It's out there in the paper. Now, the question is there an advisor out there that's willing to take a chance and say, okay, we'll step in and look after your regulatory requirements as per the JSE? And if there isn't, I think that the conversation then evolves to one that says Oak Bay's listing may be at risk, because the JSE cannot afford to have an entity that's not that doesn't have an advisor, who obviously is very important in the regulatory framework of the JSE for listed entities. So yeah, it'll be an interesting one to watch.
And what's the point of them being listed? I see it's a highly illiquid stock. It's rarely traded and so on, and it barely moves. What's the point of them being listed?
Yeah, look, I think they obviously had ambitions to grow and raise capital, and I think that's why they got listed on the JSE. But one could look at it and say, listen, if they continue to face such challenges, why don't they just delist instead and operate privately? But that's going to have a lot of implications for those investors who are not mandated to invest in non-listed entities, who are they going to sell the Zokbay shares to? You know, this it's going to be very interesting to see if they'll manage to get any non-listed entity mandates to participate in investing in a company like this. You know, whose management and owners and leadership are under such a cloud of curiosity of questions in the country.
Very interesting questions to munch on.
Most definitely.
Thank you very much, Owen. Well, that was Owen Nkomo. He's the Executive Director at Nkunzi Wealth. And after a short break, it's Nzinga with more news for you.